So credit isn't really new. I mean, the idea of credit dates back centuries, whether it's simple things like loans or hire purchase agreements. But what is new is technology and the amount of data that we now have access to, which has changed enormously over the last few decades. But can this improve the borrowing experience? Can it make lending safer? And what data can be accessed and how can it be used? That's what we're going to dive into in this episode of Navigating Digital Payments.
Welcome to the Navigating Digital Payments podcast, brought to you by Worldline, bringing you the latest innovations, trends, and predictions about the future of payments.
Hello and welcome to this episode of Navigating Digital Payments. I'm David Daly. I look after the Discovery Hub here at Worldline, and I'm really thrilled to be joined today by two guests. First up, we have Michael Diguet, who is the co-founder and CEO of Algoan. Hi, Michael. Welcome to the podcast.
Hi, David.
And we also have with us Henrik Hodam, who is the head of open banking products in the financial services part of the Worldline business. Henrik, hi, and welcome to the podcast.
Hi, David. Thank you for being here.
Thank you very much for joining us. So later, I really want to come to you both to answer this question of whether all this data we can now access via open banking can transform the credit industry. But first, I think it's worth us taking a step back and looking at what the recent developments have been in credit. So, Michael, maybe first I can come to you, because we've seen a lot of changes, I suppose, in consumer credit over the last few years. Could you talk us through what some of these developments have been?
Yes. Indeed, there has been a lot of changes in the credit ecosystem in recent years. Changes driven by new needs and new habits of borrowers, whether they are individuals or companies, but also changes driven by the recent crisis we have experienced recently. So first of all, the COVID-19 crisis and successive lockdowns, they have prevented people from physically going into a store or into an agency. And this has strongly encouraged the e-commerce and the need to digitalize the Purchase Act and the possible associated Credit Act. So this has favored the emergence of buy now, pay later, for example, which allows consumers to obtain instant credit with a frictionless and 100% digital experience. And this has also favored the development of new entrants, the fintechs, which are well suited to provide quality digital experiences. And the crisis following another, unfortunately, we are now experiencing a new crisis with the rising cost of raw materials and energy. And this is increasing the need for household financing. So this implies challenges in terms of credit risk management, because we need to be able to ensure that households wishing to take on debt will not get into trouble. And this also causes challenges in terms of credit accessibility, because we have to be sure that credit-worthy people can get access to credit. And I talked about lending for people, credit for people, but in corporate lending, the crisis have also posed the same kind of challenges, with the same need to provide a fast decision with a frictionless experience, while of course avoiding defaults. And we've seen a number of fintechs emerge in this field of digital corporate financing. So yes, we are in the middle of several crises, but the good news is that to meet these challenges, the challenges caused by this crisis, which are frictionless experience, fast decision, good risk management. The good news is that the technology can help, and in particular open banking, which is a worldwide phenomenon that is particularly being pushed by European authorities. And open banking, it's I think we will go back to that, but open banking is a true revolution for credits. And it will change the way lenders provide credit in the long run.
So, Michael, it's fascinating to hear your view on not just what the changes have been in credit, but also some of the events, as you say, that have triggered or pushed forwards those changes. And as you say, we want to come on to this topic of how open banking is changing how credit can be provided. Maybe before we come on to that, it would be good for those listeners who are not so familiar with open banking to have a really quick overview of what open banking is. So Henrik, can you give a very short, easy summary of what open banking is?
Yes, thank you, David. Open banking is really a buzzword you find everywhere today. Yeah. So first, looking what is behind this buzzword, it's just the possibility for third-party providers to use data which normally is used by banks for providing new services based on the open banking technology, based on APIs to access the data and build new services on top of existing ones. So a major milestone for open banking success is really the PSD2, the European Payment Service Directive 2, which is really regulation which defines new set of rules for handling online payments and mobile transactions. It's valid since, or it's live since 2019. So we already have few steps behind us, and the goal was really, on one hand side, to increase the security for the consumers, and we all know these strong customer authentication or two-factor authentication that has been introduced everywhere. But on the other hand, a major goal was really to improve the innovation and the competition in the market. Because in the past, there was always a big barrier for new players like fintechs or other companies to enter this banking or payment market. And how this could work is the regulation makes it mandatory for all the European banks to give access to the bank account data of the consumers or the also corporates. Yeah? And based on that, they defined mainly two different services. The first is the account information service, which really gives access to the balance of the account and also to the transactions themselves in real time, and provides at least 3 months data to the calling party. Yeah? And the second one is a payment initiation service, which allows a third-party provider to initiate a credit transfer to at the end also do some payments for various use cases. Yeah? Based on these new services, we see a lot of use cases coming to the market. They started with a multi-banking dashboard as a part of the personal finance management, but we also see quite exotic ones like green banking, where you calculate the carbon footprint based on your payment transactions and try to educate the people. Simple ones like checking the IBAN during the onboarding of new customers. And the one we want to talk today is a credit scoring, where you use the real-time data from the accounts to really evaluate the risks around certain consumers. Just maybe 2 words about the regulation, because you can imagine payments and everything, and also the very personal data coming from banks are really sensitive, and so the authority decided to put these third-party providers under regulation. So they need a license for doing that. Worldline has such a license, so we can offer not only the reach to the banks, but also to the commercial, let's say, service behind that. And important is the consumer or the account holder always takes the control of all services. So he has to give explicit consent to getting the data and also to executing a payment, which is always a very important topic of PSD2. Maybe the last one I want to mention is that you can imagine we have, I think it's more than 4,000 banks in Europe, and the majority of them we have connected. Worldline has done the exercise in more than 20 countries, so we can provide reach really to the banks, and this is a huge work because we have multiple standards, multiple versions of the standards. So we calculated more than 200 different APIs across Europe. And so we have built on top of that one API to all of these banks. And this API is also used here in credit scoring use case for simplifying the access to the bank accounts.
Wow. So if I just summarize that really briefly, with PSD2, banking customers can provide authorization or permission for other companies to access their banking data, and that can, on the one hand, include your transaction history dating back 3 months or more, but also can facilitate the triggering of payments from your bank account. Michael, you were mentioning in your response to the first question this need for provision of credit to be frictionless and for decisions to be made quickly. So in a moment, I really want to understand from you, what are some of the challenges with achieving that, and maybe also how can open banking help with some of those challenges? But before we come on to that, I just want to let our listeners know that in the next bonus episode, we are joined by Professor Leo van Hove, who is going to talk to us about who's afraid of the cashless society. And in our next standard episode coming soon, Denis Fèvre will be joining us, the head of innovation at Worldline, to address the topic of what if you never have to pay for anything ever again. But I should probably add that that's about autonomous payments rather than the idea that no money ever leaves your account. I also just want to let you know that if you want to contact us, propose topics for us to discuss, ask us any questions, give us any feedback, you can reach us by emailing ndp-podcast@worldline.com. And also, please do take a moment to subscribe to the podcast and leave us a review. So, Michael, if I can come back to you now, really interested to understand what you think some of those challenges are with providing a fast, frictionless credit experience, and maybe coming on to also how some of the open banking regulations can help with that.
Yeah, indeed, the accelerated digitization and the growth of buy now pay later, increase the need for frictionless experience and instantaneous credit decisions. The credit applicants don't want to wait to know if they can make their purchase or not, and they don't want to provide tons of supporting documents during the process. So it has to be fast, it has to be lean, and this is already by itself a challenge because it's not the case of current interfaces provided by lenders, which are not in real time and which are heavy for most of them. But the most difficult topics to address are the challenges indirectly caused by this need of a lean experience and an instant decision. So I mean the challenges in terms of security, in terms of data privacy, in terms of fraud protection, in terms of instantaneous credit decisioning, and in terms of credit decision performance. So in order to achieve all these challenges, the information provided by the credit applicant has to be digital, easy to share in a few clicks, at least if you are the owner of this data. Of course, if you are not the owner of this data, it has to be extremely hard because it has to be really protected against fraud. The data that the applicant share has to be perfectly reliable, so not self-reported and free of manipulation, and it has to provide a good discriminating power for credit risk management. And of course, the information has to be shared in a perfectly secure way and with a strict respect to data privacy. So these are the constraints if you want to have a lean, secure and performing credit application process. So it's far, as you can guess, it's far from being an easy subject. But fortunately, it's manageable. It's manageable thanks to the technology. Indeed, the open banking technology, which is now available in a lot of developed countries, especially in Europe, where it's strongly pushed by regulators. Fortunately, this open banking technology ticks the box of every challenge that is needed to make the credit onboarding process fast, frictionless, and secure. So open banking will radically change the way a lender provide credit in the long run.
So it's interesting because I just reflecting on what you said there, Michael. I recently applied for a mortgage, and for that I had to, believe it or not, print out various bank statements, scan them in, provide proof of address. So there was quite a process to go through. And I hadn't thought, but of course, every manual step like that also opens up the potential for fraud, I guess, and manipulating the data because it's not going directly from my bank or from an institution to another institution. So I guess that starts to give me some idea of how maybe open banking can help not just make it easier but also make it more secure. So can you go into some more of the specifics, perhaps, Michael, around how open banking helps with these challenges?
Sure. So about open banking, if we put aside, temporary implementation issues of open banking, this technology is in theory the perfect solution to help with the challenges we mentioned before, and you just mentioned. It's even impressive how it ticks every box of these challenges. So I said in theory because we have to keep in mind that open banking is still a recent technology, and the way it is implemented by banks today is not yet perfect. In some countries, it's very mature, it's working very well. In other countries, there are still improvements to be done, but it's clearly evolving in the right direction everywhere in the world. So this is good. This is good for the credit industry. So how open banking can help for these challenges? So open banking allows, as we already told before, open banking allows users with their consent, of course, to share their bank statements in order to efficiently obtain services such as credit, for example. And so in the case of a credit, the credit applicant will be able to share their bank account data with the lender. Doing this will offer him a much better credit onboarding experience because accessing the credit applicant's bank statements through open banking is done in real time and in full digital. So you don't have to provide any documents. It's full digital. And the data we can get through open banking, the data of the bank statements, can be treated automatically and instantaneously. So the lender can provide an instant result to the applicants. So no need to wait several hours or days for the result of a manual analysis. And by the way, automating the credit decision thanks to open banking obviously allows the lender to lower its processing costs. And something extremely important also is that open banking is incredibly performing well for credit risk management because the data from open banking, so the bank statements of the user, makes it possible to determine much more reliably than before who is able to pay back their loan and who is not. So it prevents borrowers from getting into trouble. The big advantage of open banking data is that it's very rich, very granular, perfectly up to date. It's up to date data. It's error free because it's coming directly from the bank, and it's fraud free from the same reason. It's coming directly from the bank. It cannot be manipulated by the user. And of course, this is not the case of data which is traditionally used for credit processing. Because today it's either self-declared data, self-declared socio-demographic data, or credit bureau's data, and this data is not up to date, can contain some errors. So that's why with open banking we can reach some highly better results. And at Algoan, with our customers are some lenders, obviously, we obtained tremendous results compared to traditional methods. So some of our customers can provide credit to 40% more users or divide their credit risk by 2, thanks to this open banking technology, which is clearly a revolution for credit decision.
Wow, I mean that's really impressive, Michael, and interesting to hear. And I guess if I try and summarize that into 3 aspects, as you said, there's the kind of convenience for the user. They're not having to manually fill anything in, scan documents, send things off. There is the kind of fraud prevention because the information is going directly from one institution to another, can't be tampered with. And then also, as you say, the possibility to make the credit assessment more automated because all the data is coming in a standardized format. So I mean that I think shows the power of using open banking in that context. But it does make me think, of course, with the old way of doing things, the consumer might feel that they're retaining more control because they're not opening up all their data. They're very specifically sending in individual bank statements or answering specific questions. So do you have a view on why a consumer would be happy to share data in that way, and why they, or do they have concerns when using this that perhaps they're sharing too much information?
Yes, that's a fair question. So obviously open banking is a new thing. People are not used to it yet, and they can be afraid of sharing their bank account data, especially with all that we see in terms of fraud or phishing. So yes, it's a good question, but the chance we have in the credit space is that the user is asked to share his bank account by a brand he knows very well and that he trusts. Most credit brands are known and trust, and that helps a lot. And a very important thing also is to explain to the user the advantage he will get by sharing his data. For a credit application, it is a faster and easier process, and it provides a better chance to obtain the credits, because the assessment is more performing, so you have a higher chance to have a credit if you can repay it. And the last important thing to do in order to maximize success in terms of consumer adoption is to explain to the user in full transparency what will be done with their data and with which level of security. For example, in France currently, Apple is pushing a lot open banking, to provide credit to buy their devices, and they are doing that very well. Apple is very good at explaining how the data will be managed and so on. So this is something really important. And of course, when consumers understand, when you explain to consumers that open banking is a regulated activity with a lot of constraints on data privacy and on security, it obviously help a lot to reassure the user. To talk concretely on the field, we have very good results. In France, we have 65% of users who accept to share their bank account for a loan, and in the UK or in Spain, it's higher, like around 80%. But for example, in Germany, it's lower, so it depends on the country. But the good thing is everywhere it's evolving in the right direction, and I'm totally convinced that sharing your bank account to obtain a financial service, a credit or something else, I'm totally convinced that it will become very common in the near future. It's like every innovation, there is resistance in the beginning, but when the added value is clear, people use it, get used to it, and then cannot do without it. I don't think people will share their bank statement in a paper or PDF format once they have tried open banking. It's so much easier. And just to finish, to be honest, there is still a use case where the use of open banking is not perfectly well adopted. It's the 3 or 4 time split payments, because people perceive split payment more like a payment than like a credit, even if in fact it's a credit. When you pay in 3 times, it's a credit. But people perceive that like a payment, and they are used to only sharing their credit card number for this kind of service. By the way, it's a big issue for credit risk management, because you cannot have a lot of information about the affordability of the customer by looking at his credit card number. But I have no doubt that this will change, even for the 3 time or 4 time split payment. On one side, there is a pressure from the regulator that asks for a better affordability assessment for this kind of business, buy now pay later, which is growing very quickly. And on the other side, the fact that open banking will become more and more common for users. So no doubt that it won't be an issue in the coming months or years.
And that's a really interesting point you make there about regulation, I think, Michael, because I think sometimes there is a perception that regulation stifles or slows down innovation. But of course, actually, when it comes to people accepting a solution, knowing that it's safe to use, it's a really important factor, particularly when you're in financial services. And I guess that's the thing, knowing that something is regulated helps people have the confidence to use a service, as well as what you were saying there about familiarity. So the more people get used to using it, the more comfortable they will be to continue to use it, I imagine. So I think that the really interesting points there. I know, Henrik, you mentioned some of what Worldline has been doing, and Michael, you mentioned some of what Algoan has achieved in this space. So maybe I can come back to you, Henrik, and ask you just to share a little bit of information about what Algoan and Worldline have been doing together, and maybe also, if you can, what you've learnt from that experience and where you see the next steps being.
Yes, looking at the partnership between Algoan and Worldline, which also has been announced in a press release before the summer, we see really the power of bringing together these two assets. The asset, the knowledge and experience of data analytics and scoring expertise of Algoan, together with the really large reach among the European banks of Worldline, together with, let's say, the professional way of doing the data management, fulfilling all the regulations also regarding data processing, and also, of course, the let's say huge customer base Worldline really has among the financial institutions, but also among merchants and other entities. Yeah. So based on these two assets, we really developed I would call a new product, Credit Insight. That's how we call it, which is exactly the combination of the, let's say, the data coming from the banks together with the knowledge, with the calculation, the algorithms on top to really calculate a score or really giving some foundation for credit decisions. Yeah. But not only the technical cooperation was very successful, also we created a common way of approaching the market. Yeah. So looking at the different countries, looking also at the different use cases, we defined, let's say, a way how we could harvest the existing customer base, but also how we can target new customers. Yeah. The second part of the question was about the experience. Here we can say definitely we have a proof of evidence that the usage of this real-time data really brings a dramatic increase of the accuracy of the scoring functionalities. Michael already mentioned before, if you compare it to the traditional very manual ways of doing it, it's definitely a huge increase. The second one was also already mentioned, was the manipulation proof. Yeah? So to say we can also, for the lenders, for the credit institutions, really make it more liable information, and so the let's say the basis for all the decisions are much more reliable, as I said. Yeah. But also for the users, it's a simplification of the user experience. Yeah. They can use a kind of wizard approach where they can approach their bank environment. They can choose the account they would like to provide, and in general, the interesting one is that to speed up the credit approval process. To make it faster for the consumers, also to get in worst case a no, but hopefully a yes answer from the credit institution to get the credit for buying things. Yeah, and of course for the credit institution, already mentioned a huge cost reduction. Also looking at and the higher conversion rate, that they can give more credits also to other candidates. Yeah. More technical lessons learned we had that the analysis of the data is really country, not speaking language dependence. Everybody can imagine that we have different payment methods, different payment behaviors, but also different taxation in the different European countries. And so for the data analytics, this is a very crucial part if it comes to data categorization, but also to interpretation of certain data types. We learned that the impact on the country specifica it's enormous. Yeah? This also leads to the fact where we said, okay, on our roadmap for the next steps, we said, okay, we set up a roadmap for the countries where we say, okay, starting with the key countries, but then extending also to other countries, involving also these additional knowledge, using data that is gathered there to train the models to have a really high accuracy. Yeah. But also, I think mentioned already is doing kind of credit scoring for SMEs. This is really a huge topic at the moment on the European market. A lot of banks realize that their offering, especially for SMEs, is not powerful, not as powerful as for large corporates and not as powerful as for consumers. And so they are looking for white label solutions as well to enlarge their offerings, their portfolios for these. Yeah, not new, but let's say newly discovered target groups. Yeah, and the last one I think mentioned already, buy now pay later, where we see credit scoring as, let's say, the initial step for judging the risk behind giving some goods. Only receiving a partial payment. And here again, open banking helps a lot because these installment payments, let's call it like this, or the split payments, can be, of course, also initiated by using a payment initiation service based on open banking. So exactly, we can combine the two worlds together to develop an end-to-end product also on buy now, pay later. The last point is that we currently target mainly credit institution or banks for target groups. But we also started to investigating if there is a chance to sell it directly to merchants, as maybe not as a credit itself, but also for evaluating the level of maturity of a consumer. For instance, to give categorization for premium customers that can later on, for instance, get some premium services, or for customers that have issues with payments to avoid that they lose the customer at all. So based on this data could be also a better basis for a merchant to decide what to do as a next step with the consumer.
That's really interesting to hear, Henrik, and it sounds like some really useful lessons and results actually already learnt from that experience. I guess what I want to do, as I said at the start, is I want to circle right back round to this question of whether we think that open banking really can transform the world of consumer credit. And maybe, Michael, I can give you the honour of coming back to that question and giving an answer for us.
Yes, thank you very much for this honour. I'm totally convinced that open banking will transform the world of consumer credit in the long run. If we look back in the last 30 years, there have been no real revolution in consumer credit. The previous revolution took place in the 90s with the use of statistics to create credit scores. So this was a big revolution for the democratization of consumer credit. But I'm convinced that the one which is occurring right now with open banking will be bigger and totally game-changing. So I talk about open banking, but talking about the future, I should say open finance, which is a kind of next step for open banking, and it's currently explored by regulators and innovators. Open finance will allow the sharing of more financial information than bank statements, and as a consequence, it will allow new services, new use cases. With the right maturity and right implementation of open banking or open finance, the lender will be able to have in real time the full picture of the credit applicant's financial situation. The data that the lender gets can be fraud-free because it comes directly from the bank, totally secured. And yes, all this can be done with a few clicks. For an easy and frictionless user experience, and with further developments, Open finance can also be used for a best-in-class KYC, know your customer process, simplifying again the onboarding process. So actually, I think that the process will become so simple and so secure that the payment and credit will merge in the future. The credit will become a payment method like another, and it won't be a problem because reliable algorithms will ensure that this is sustainable for the consumer. So, and this is very good for the consumers. This will be the end of non-managed and costly overdrafts. So yeah, for me, the future of open banking, open finance, and what we are doing with Worldline and Algoan is very, 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 very cool.
Well, thank you, Michael, for answering the question. And I think it's a really important point you make there at the end as well, that better access to data and better algorithms for rating the affordability of credit are good for the consumer at the end of the day. That prevents them getting into a situation where they take on loans that they can't repay or they have extra interest payments. So I think that's a really important point to make. If I try, I mean, we have covered such a lot of ground here. If I try to just briefly summarize, of course, you started, Michael, with telling us about the recent events and evolutions in credit, and particularly buy now, pay later, and having really fast decisions and a frictionless kind of experience at the point often where people are buying goods or services. Henrik, you gave us a fantastic overview of open banking and how that provides access to banking data, but in a safe, secure way, and also always with the permission of the consumer who owns that data. Then, Michael, understanding some of those challenges around providing fast decisions and a quick experience for the user, and how, as you said, I think open banking almost ticks every box in terms of helping with that. That was really interesting. And then also, I think from both of you, interesting to hear some of the results that you've been seeing in this space. And then I guess coming back to that question, Michael, your answer was yes, it definitely can transform the world of consumer credit, but also, as you said, with the developments in open finance, that can also take it to the next level. And as I think the way you described it was interesting, where you said actually credit or split payments will become almost just as normal as any other payment means, no longer really differentiated from any other payment means. So really want to thank you both for joining the podcast today. So thank you, Michael, first of all.
Thank you very much. It was an honor to be there.
Likewise, really, really great to have you on the podcast. And Henrik as well, thank you for joining us.
Oh, you're welcome.
And that just leaves me, of course, finally to thank you, the listener, for joining us today as we have navigated digital payments.
Thank you for listening to the Navigating Digital Payments podcast, brought to you by Worldline. Join us next time to learn more about the latest innovations, trends, and predictions for the future of payments.